Subscribe to our channel and click on the bell button to receive important financial updates faster than anybody else. Friends, welcome to another video on your channel Profit and Equities. Now, a promoter conceives the business idea, executes the needed formalities to set up a company, and mentors the staff to achieve the company's objectives. So, analyzing promoters' investments in their companies can be an effective strategy for identifying good stocks. Companies that witness a gradual increase in their promoter's stake can be profitable investment options. Now, rising promoters' stake in a company shows that they are confident about its growth. As promoters are generally involved in the day-to-day affairs of their business, they are well aware of the strengths and weaknesses of their core business. Although rising promoters' stake should not be the only criteria to evaluate companies, it is a significant factor that investors must consider alongside other fundamental factors such as sales, profits, assets, margin expansion, etc. In this video, we'll be talking about 4 stocks with rising promoter stake that can be good bets from here on. Now, this is not our own research. We'll be providing the link to the source for this video in the description section. Please go through it to build more conviction around your investment decision. Also, friends, if you have not already become members on Profit and Equities, please click on the join button below and follow the steps. This will entitle you to member-only privileges on Profit and Equities. This includes being added to our WhatsApp group where we discuss individual stocks and do portfolio reviews, etc. Also, friends, if you like the content that we produce on our channel, please don't forget to like this video, share these videos, and if you have not already subscribed to our channel, please click on the red subscribe button below. This will help you get notified whenever we upload a new video. Please watch this video to know more. Now, the company in question is Raymond Limited, which is available at Rs 828.00 and the face value for it is 10. The symbol for it is RAYMOND. Now, Raymond Limited is an Indian lifestyle, textile and branded apparel company. The company is engaged in wool and wool blended fabric. The company's segments are textile, which includes branded fabric, denim and shirting, which includes denim and shirting fabric, apparel, which includes branded ready-made garments, garmenting, which includes garment manufacturing, tools and hardware, which includes power and hand tools, auto components, which include auto components and forging, and others, which includes non-scheduled airline operations and real estate development. The company holds interests in the engineering and fast-moving consumer goods sectors as well. Now, this company is spread across a large number of business segments like textile, shirting, apparel, garmenting, tools and hardware, and also auto components. According to a report by Antique Stockbroking, Raymond's increased focus on improving operational efficiency, building a strong franchisee-based distribution network, and enhancing product portfolios are likely to spur growth. Additionally, the management expects improvement in return on capital employed and is aiming to be free cash flow positive by the year 2019-20. Now, as is evident from the one-year chart, this company went on a downtrend for the first few months of the year. However, after that, it has been consolidating. The market cap of the company is 5,082.33 crores, which means that this company is a borderline stock between a mid cap and a small cap. The EPS of 27.37 translates into a price to earnings ratio of 30.25, which is very much cheaper when compared with the industry PE of 64.50. The price to book ratio of 2.50 is also not wildly expensive. The company has a very high debt to equity of 1.5203, which is a concerning factor, and the return on equity here is nothing special at 0.0892. The company's dividend yield is also on the lower side at 0.36%, whereas the promoter holding is also on the lower side at 44.28%. Also, none of the promoter's holding is pledged. Total debt on the books of the company is 2,970.4 crores, which is a pretty high figure, whereas its 52-week high and low stands at 1,025.30 and 593 respectively. Now, the second company on the list is CCL Products India Limited, which is available at Rs 257.10 and the face value for it is 2. The symbol for it is CCL. Now, CCL Products India Limited is engaged in the manufacturing of instant coffee. The company operates through the coffee and coffee-related products segment. It is engaged in the manufacture of soluble instant spray-dried coffee powder, spray-dried agglomerated and granulated coffee, freeze-dried coffee, and freeze-concentrated liquid coffee. Now, this company manufactures coffee and customized coffee products. Analysts are bullish on the stock due to its resilient margins, cost efficiency, superior manufacturing technology, economies of scale, and strong business model. Additionally, its fully automated greenfield plant in Andhra Pradesh is expected to cut its labor cost, and proximity to the Chennai port will help the company save on its logistics expenses. Now looking at the 1-year chart, this company has not had a definite trend for the year and has literally been choppy, closing the year almost at the same levels that it started it. The company is a small cap with a market capitalization of 3,420.15 crores. The EPS of 11.64 translates into a price to earnings ratio of 22.09, which is much cheaper when compared with the industry price to earnings ratio of 30.09. The book value of 63.06, however, translates into an expensive price to book ratio of 4.08. The debt to equity here is 0.5540, whereas the return on equity for this stock is a decent number at 0.1962. The dividend yield here is 1.36%, whereas the promoter holding is just below average at 45.28%. Also, none of the promoters' holding is pledged. Total debt on the books of the company is 464.7 crores, whereas its 52-week high and low stands at 306.90 and 225.50 respectively. Now the target here for this stock has been set at 379 with a potential upside of close to 47%. Now aggregating the various recommendations from the analysts, this company has 11 buy recommendations, 1 hold recommendation and 0 sell recommendations. Now the next stock on the list is KC International Limited, which is available at rupees 320.10 and the face value for it is 2. The symbol for it is KEC. Now KEC International Limited is engaged in the construction of utility projects. Its geographical segments include India and outside India. Its power transmission and distribution business includes providing end-to-end solutions in power transmission and distribution. Now this company is primarily an infrastructure engineering, procurement and construction player. The company's presence is across power transmission and distribution, railways, civil, smart infrastructure, cables and solar segments. Analysts believe that KEC's strong order book, improved working capital cycle and a robust outlook for the railways and civil segment provide strong revenue assurance. The management expects 15 to 20% revenue growth and 10 to 10.5% EBITDA margin in 2019-20. Now looking at the 1-year chart, this company had been an underperformer throughout the entire year. However, over the last few days, there has been a huge spike in the stock price of this company. The market capitalization of the company stands at 8,229.40 crores, which means that this company is a mid-cap one. The EPS of 19.28 translates into a price to earnings ratio of 16.60, which is slightly more expensive when compared with the industry price to earnings ratio of 13.87. The book value of 94.72 also translates into a slightly expensive price to book ratio of 3.38. The company has a debt to equity of 0.7622, whereas the return on equity for this company is a decent figure and stands at 0.2195. The dividend yield here is 0.84%, whereas the promoter holding is just above average at 51.35%. Also, none of the promoters' holding is pledged. Total debt on the books of the company is 1856.2 crores, whereas its 52-week high and low stands at 384 and 233.30 respectively. According to the report that we are referring to, the price target here has been set at 360. On the analyst recommendations front, this company has a total buy recommendation of 28, hold of 2 and 1 sell recommendation. Now the final stock on the list is Trident Limited, which is available at rupees 67.65 and the face value for it is 10. The symbol for it is TRIDENT. Now Trident Limited is a terry towel, yarn and wheat straw based paper manufacturer. The company's segments include textiles, paper and chemicals and others. The company's geographical segments includes USA and the rest of the world. This diversified conglomerate's major business segments include yarn, bed linen, paper and chemicals. The analysts are bullish on the company due to its increased asset utilization, higher captive yarn consumption and robust balance sheet that will improve its return ratios. In the fourth quarter of 2018-19, its textile segment grew 17.1% year-on-year, while paper and chemicals grew 25.1%. Free cash flows are expected to improve significantly due to the completion of all its major capital expenditures. Now looking at the 1-year chart, this company has also not had a definite pattern and has been choppy throughout the entire year. The market capitalization of the company is 3,447.41 crores, which means that this company is also a small cap one. The EPS of 7.32 translates into a price to earnings ratio of 9.24, which is slightly cheaper when compared with the industry price to earnings ratio of 10.59. The book value of 58.57 also translates into a cheap price to book ratio of 1.16. The company has a very strong dividend yield of 4.43%, whereas the promoter holding is also a very good number and stands at 70.77%. Also, none of the promoters' holding is pledged. The 52-week high for the company stands at 75.70, whereas its 52-week low is 52.15. Now friends, please don't consider this to be a recommendation on our part. Please go ahead and do your own research. We'll be providing a link to the source for this video in the description section. Please go through it to build more conviction around your investment decision. Also friends, if you have not already become a member on Profit and Equities, please click on the join button and follow the steps. This will entitle you to member-only privileges on Profit and Equities. One of the privileges includes being added to our WhatsApp group where we discuss a lot of stocks, have individual portfolio reviews, etc. Also friends, if you like the content that we produce on our channel, please don't forget to like these videos, share these videos, and if you have not already subscribed to our channel, please click on the red subscribe button below. This will help you get notified whenever we upload a new video. Thanks for watching, and if you have not already subscribed to our channel, please consider doing so.